That's crazy, Doug, because I'm background today. Hi, everyone. My name's Dr. Steve Gill. I'm a professor of accounting and taxation at San Diego State University. I was a practicing CPA for almost 15 years before I went back into academics, and I am here to run the chat room today. Your presenter's really going to be Doug.
Thanks, Steve. We call Steve Chat GPT, so he'll answer any question. Maybe not how you like it, but it'll be answered. So hello, everyone. Good afternoon. My name is Douglas Kelley. I am a guest lecturer at San Diego State in the accounting department. I've been teaching and running the Accounting 409, which is the SDSU VITA program, for 7 of the past 9 years. I took a 2-year hiatus as I'm still active duty Navy for 142 more days before retirement. I was in DC for a couple of years, so Steve took the reins again, and he taught for a couple of years. But I've been back now. It's my 4th year consecutively teaching the Accounting 409 class at SDSU. I am an enrolled agent, enrolled to practice for the IRS. I have my own tax practice that I will plan to grow some even more upon retirement from the Navy, but I've been doing that for about 10 years or so. And then my wife and I also have some bookkeeping that we do kind of together, as my wife is a CPA who used to work at one of the big four accounting firms a while back. But with that, without further ado, I'm going to get into the presentation. So I'm going to share my screen, and then I'll get confirmation that it's shared, and then I'll get started. My screen should be visible. Can I get a thumbs up if you see it, Steve? Cool, perfect. So today we're going to talk about essentially it's like a tax workshop for foreign students and scholars, what it means to be a resident versus non-resident, how it applies to foreign students, foreign scholars, some resources really at San Diego State that most of you can probably use. But kind of how we're going to run it today is I'm going to give the presentation. As you have questions, you can put them into the chat. Professor Gill will be the one kind of monitoring the chat. And then at the end, I'll open up the questions as well. But for now, we'll get into it. And if you have any questions, put them in the chat and Dr. Gill can answer those. So before we begin, filing taxes means submitting tax forms or a tax return to the appropriate government agencies. Those agencies, in this example, most likely for everyone in this presentation, is the Internal Revenue Service for the federal government for federal taxes, and then the California Franchise Tax Board, or the FTB, for California state income taxes. Although you may not have any tax liability, you could still be responsible for filing taxes every year. We are going to discuss this year, and that is 2024. Of note, we prepare the 2024 tax return in 2025, but we're asking questions as of December 31st, 2024. So a lot of those questions are like end of the year. We don't care when we talk about are you still exempt or counting days. We don't care about the first 2 months, 3 months, 3.5 months of 2025 while we're preparing your 2024 return. UCSD does offer Glacier tax software to assist you in preparing tax returns. Ms. Garcia, can I get a confirmation that's still true? I believe that is.
That is true.
Okay, cool. I'm not lying. That's great. So yeah, UCSD does offer. I believe they just give you a code. They pay for that for you if for some reason you cannot have your taxes done via SDSU VITA or the timing doesn't make sense. That's another option for those at UCSD. So SDSU's VITA program is open, but appointments are limited. We actually were able to this year. We were really limited last year. We had the enrollment wasn't as good as we had seen in the years past. So we were only able to offer about 250 appointments. This year, enrollment's back. One big change, if you've done VITA before at San Diego State or had your tax return prepared, VITA has traditionally operated on Saturdays from 10:30 to 3:30. With, as I mentioned in the beginning, I am retiring from the Navy in about 5 short months. I was able to work my vacation schedule with the Navy around my lecturing at San Diego State, and we did move that class to Fridays this year. So VITA is actually preparing tax returns on Fridays when historically that was on Saturdays. So please make sure that when you're booking that appointment, you'll see it's a Friday appointment. I want to say when I gave this presentation last year to UCSD, there weren't any appointments open, and I opened a few after. Right now, there are still a large number of appointments available, maybe not in the first couple of weeks, but we do have a large number of appointments still available for you to reserve. Other services available, please be aware of what you find via Google. That Google is really going to talk about and really advertise and cater to the population that are residents, right? Those people that can, a much larger population that's going to file a tax return. They may not be focused on like a niche group such as foreign student non-residents, like foreign student scholars and foreign students. Another way you can do a sprint tax. So once again, for UCSD, you do have Glacier Tax. Sprint tax is another one. You see the starting prices there. Please do not, if you're a non-resident, please do not use TurboTax. It will not prepare a non-resident tax return. It will prepare a resident tax return. So a resident tax return is going to be on Form 1040 or Form 540 in California. A non-resident is going to be Form 1040 NR or California Form 540 NR. Right. So please do not prepare your return in TurboTax if you're a non-resident. We have people do that, then they come to VITA. We can't really fix what was created within TurboTax, so it becomes a bigger headache for the foreign student or the foreign scholar. And I believe we're hitting UCSD a little earlier than normal. Typically, this presentation kind of falls in March, but we got it here in late February. So hoping to catch some of those people before they make that really costly mistake with TurboTax. So the U.S. tax system is considered a pay-as-you-go system. The income taxes are withheld from your pay as it is earned. When you're filing your tax return, really what we're trying to determine is what your true tax liability is. So we have your tax liability, which is calculated in the tax return, and then your withholdings, or the amount that was withheld, that's line 2 in that W-2. The amount that was withheld, we're comparing that to your actual tax liability. And if your actual tax liability is greater than the amount withheld, then you pay taxes. You owe a little more money to the government, either federal or California in this example. If those actual tax liability is less than the amount that was withheld, that's when you get a refund. The system is set up to provide for refunds, but it does not always work that way. This is specifically really true for non-residents that are not students from India. So if you're a student from India, it's typically set up in your favor just based on how the tax treaties work. But for others, even if you have those taxes withheld from your check, it may not be enough just based on the different tax treaties and tax laws that are out there. So buyer beware, listener beware, taxpayer beware. Comparing refunds can be extremely folly. And that is, comparing a refund with your friend, comparing a refund that you had a previous year. At VITA, we'll get questions sometimes like, hey, my refund's only $600. Last year it was $1,000. And it's just very finicky on why that could occur. There could be a multitude of reasons why. Those checking the return to make sure it's right, sure. But for us to try to compare and go, hey, why'd you get 600 versus 1,000? We'd have to have the previous year return up, the current year return up, and try to attempt to do that, which just takes a lot of time. So we ask to try not to compare those refunds as they can be relatively folly. It depends on income, withholdings, deductions, and even within income, if for some reason you had 2 different jobs where you made $15,000 each, that would potentially provide a different level of withholding than if you had the same job and made $30,000, right? So even within that income, you could have the same amount of income, but based on the number of W-2s you had and how those withholdings were calculated, that could change your refund as well, or the amount that you owe. It doesn't change your actual tax liability, right? If you have 2 $15,000 W-2s or one $30,000 W-2, your liability is going to be the same. It's going to be the amount that's withheld that's going to differ. Moving on to the employment taxes or social taxes. So this is Social Security and Medicare. Foreign students and scholars that are non-residents are not generally subject to these. However, if there is any work performed outside of that treaty permitted work, it will be subject to employment tax. The income tax treaty benefits do not typically extend to employment taxes. Those come through what's called a totalization agreement, which are very rare. One other tax I'll put in here, it's really on the California side, but we get questions a lot. If you're working in California, that's the California SDI or California VPDI. It's basically California Disability Insurance. Usually shows up in box 14 of your W-2. That one you're not going to get back at all. It's not really a tax. It's like an insurance. It goes into a fund that helps pay for some other potential social programs that are out there. So it's not a number that you can get back. Social Security and Medicare, we'll talk a little bit about later. There isn't a way for you to get that back if it was withheld from your paycheck, from your W-2. We have a slide later on those kind of directions on how to do that. So when it comes to U.S. federal tax and really California tax as well for the state side, it applies on a source-based and a resident-based approach to income taxation. So source-based is income is earned in the U.S. is largely taxed by the U.S. And substitute that for California, source-based income earned in California is largely taxed by California. When we go to resident-based, so if you're a U.S. resident, you get taxed on your income regardless of where it is sourced, right? So that's kind of the big difference between a resident and a non-resident is a source-based approach versus a total income-based approach for a resident. So while you may hear the word "I'm exempt" for a foreign student, I'm exempt, that doesn't mean that doesn't necessarily mean that you're exempt from income tax. A non-resident can still be taxed in the U.S. on U.S. sourced income, such as a non-resident can still be taxed in California on California sourced income. So a resident alien is generally subject to U.S. income tax on individuals' worldwide income in the same manner really as a U.S. citizen. And then we need to determine whether if someone's not a U.S. citizen, are they a resident or non-resident alien for tax purposes? And we'll kind of have a couple slides here that help define that, but then also provide a few examples as well. So a non-resident alien, we just mentioned it, subject to U.S. income tax only in the following types of income. You see U.S. sourced annual or periodic income, dividends, rents, royalties, taxable income effectively connected with a trade or business that's working as an employee, net gain from the sale or exchange of U.S. real property, and net U.S. source capital gains for the taxable year. So looking at the two tax trees, we'll call it, on the left side, we see the U.S. tax system, which is Form 1040, which is a resident tax return, U.S. citizens, permanent residents, and resident aliens. And then the other side is that non-resident alien tax system, or Form 1040-NR. That's a non-resident alien. So who is a resident? So any U.S. citizen, anyone that's a green card holder, any lawful permanent resident of the U.S. under immigration law, and then anyone meeting the substantial presence test. This substantial presence test is really what's key in determining whether or not you as a foreign student or you as a foreign scholar is considered a resident or non-resident, and whether or not you are exempt from the substantial presence test or not. So the substantial presence test is a test based on a number of days present in the U.S. to determine if you're a tax resident. And I just mentioned students and researchers, or students and non-students, students and scholars may be exempt from having to count days and will be declared non-resident aliens regardless of the number of days they were in the U.S. for a specific given year. So you see the definitions: a student, someone enrolled in classes as part of a degree-seeking program, and then a scholar, researcher, teacher is pretty much everyone else. We'll see students will come into the U.S. on an F1 visa, and then sometimes we'll see a J1 visa. Where it gets a little tricky is scholars or non-students also come in on a J1 visa. So you want to be be clear in what you are to determine whether or not you have to count your days or you're exempt from counting your days for the substantial presence test. So the substantial presence test is listed here. It's based on how many days you were physically present in the US. There's two parts. First part is you were in the US for at least 31 days in the current year, and then at least 183 days during the 3-year period based on the formula. You see 2024 or current year we're talking about. Once again, not talking about 2025 yet. That's next year. 2024, those days count 1 for 1. 2023, essentially every 3 days is a day. And then 2022, every 6 days is a day. So you do that formula, add it up, and if that number is at least 183 days, then you're a resident alien. So 31 days in current year and 183 days based on that formula below make you a resident alien, with the exception being exempt individuals, exempt from counting days, not exempt from tax. So exceptions to days present, does not include regular commuters from Mexico and Canada. The Mexico one is much more common here in San Diego as we're closer to the border. It does not include days in transit, days that medical condition prevented departure, and where it applies to almost everyone in this presentation, certain teachers, trainees, and students. Talking about the regular commuters, that would be someone that essentially lives in Mexico, comes to the US to work. They would potentially be taxed on that US sourced income, but those days wouldn't count for the substantial presence test. So if they're a daily commuter coming to work in the US from Mexico, they would still be a non-resident alien. They would just have to pay tax on that US sourced income. But back to most of those that are here, and that's that certain teachers, trainees, and students. So testing for residency status if you're a student. So there's really 2 questions you have to ask. There's a couple more, but those get really into the weeds. Generally, if you answer these questions and you say yes to question 1 and no to question 2, then you're an exempt individual. You're an exempt student, right? Meaning those days in the US do not count towards a substantial presence test. Therefore, you're automatically deemed a non-resident alien, and you'll file potentially a tax return if you worked, but you'll file 1040 NR. So the first question, are you temporarily in the US as a student on an FJ, M, or Q visa? I've been doing this for a good period of time. I've never seen an M or a Q visa, but F and J are the common ones that we'll see. And then for students, have you been in the US for no more than 5 calendar years? Any one day during the year counts as a year. So if you're yes to both, then you're exempt. Sorry, I said yes and no, but actually the way the question 2 is worded is you've not been in the US for more than 5 years. So you're answering yes to that. So if you answer yes to both question 1 and 2, then you're considered an exempt individual. To make this really easy for some people, if you're a foreign student and the first time you ever came into the US on an F or J1 visa, or F2 or J2 if you came with your parents a long time ago, but if the first time you came into the US on an F visa is 2020 or later, then you're going to answer yes to both these questions and you're going to be a non-resident. If you're a student that came 2019 or prior, then it starts asking questions on which years were you here, which years were you not here. But if you came to the US 2019 or prior and you've been here and haven't left, then you're likely a resident. Once again, 2025 does not count. We're analyzing 2024 tax status. So different for the scholars. So am I exempt? So are you temporarily in the US as a teacher or trainee on a J visa and not also a full-time student? That should say, have you been in the US for no more than any part of 2 of the preceding 6 calendar years? So if you answer no to, so essentially, if 2018 to 2023, you've been in the US for at least 2 of those years, and now 2024 is kind of your 3rd year in 7, then you're going to be a resident. But if 2024 is essentially your 2nd year in the past 7 in the US, then you'll be considered a non-resident as a foreign scholar. And you see an example here. Here are the different types of visas. The one thing I like to point out is an F1 versus F2, J1 versus J2. right? The person that's a student or a scholar is going to be that F1 or J1. The F2 or J2 is going to be spouses or spouses or children of either the academic student or the exchange visitor. So this is the chart here that I kind of referenced those top two questions. This is from IRS publication 4011. You can Google it. You can look at this page yourself and kind of answer those questions. But this is kind of the initial. You see there's a couple more questions there about closer connection exception. Are you in substantial compliance with your visa? I presume that if you're a student or a scholar and you're still here and you're getting your tax return prepared, that you're probably in substantial compliance with your visa. So we're really focused on that question 1 and question 3. So once again, back to this exempt word. We get it a lot. I'm exempt from tax because I'm a foreign student. You're not exempt from tax necessarily. You're exempt from counting days for the substantial presence test. Now, could the US have a treaty with your country that does exempt a portion of your income from tax? Yes, that's possible. However, that's not always true, and it's not a blanket, I'm an exempt individual, so I don't have to pay tax. So looking at an example here, immigration status is an F1 or J1 student. They arrived in the US on December 30th of 2020. It's their first visit to the US. The student was physically present in the US every semester since arriving, but left the US for 2 months during each summer. So as I said a little bit ago, if the first time you came is 2020 or later as a student, then you have not used your 5 years of exempt status yet. Therefore, you're going to be a non-resident. So we see on the left, those exempt years, 2020, 2021, 2022, 2023, 2024, those days do not count. And that's why we have 0 over here for the number of days, because these are non-exempt days that we would count. So since this person's exempt for 24, 23, and 22, as well as 21 and 20, the number of days is 0. Now counting, once again, not counting for 2025, but if we were to do the same thing, let's say now the person's here in 2025 as well, we would still have 0 for 24 and 23, but then we would count the days for 2025, right? Just because they're no longer exempt in a year, they were still previously exempt for those days for other years. So looking again at an F1 or J1 student, they arrived in the US as an undergrad student they arrived again in August 2023. They were a student previously from May of 2015 to August of 2018. They were physically present in the US since arriving, but left the US for 60 days during the summer of 2024. So you see the first 4 years of that exempt status, it's not like consecutive or anything. It's like in total, no more than 5 years. So 2015, 2016, 2017, and 2018 are years 1 through 4. 2023, that year they arrived back again, is year 5. So therefore, 2024 is year 6. They're no longer an exempt individual for 2024. So we have to count the days. I messed up my math by a day here because last year was a leap year, but 366 days minus the 60 days for summer of 2024 puts it at 306, which is irrelevant, immaterial for the calculation. But you see, although they were here in 2023, I'm not counting any of those days because in 2023 they were still exempt. Not that it matters, because the substantial presence test says, hey, at least 31 days in the current year, and the total is greater than or equal to 183 days. Therefore, they're a resident alien. And now moving on to a J1 scholar, arrival date of August 2022. So 2022 and 2023 are the exempt years. Therefore, 2024 would not be. And since they were here all year, they'd meet both portions of the substantial presence test. Therefore, this J1 scholar in 2024 would be considered a resident alien for tax purposes. So moving on to a J1 scholar. Again, they were in the U.S. from August 2019 to June 2023 as a student. They returned to the U.S. in August of 2024 as a J1 scholar. We're going to look back 2018 to 2023, or sorry, 2019 we look back to 2018. They didn't arrive till 2019. So those first 2 years, they were good, right? 2019 and 2020. And we're looking at scholar now, so right, they're good. 2019, 2020. We look at 24, 23, and 22. They're not exempt from the scholar portion. Therefore, they meet the 31 days in the current year, and the total is greater than that 183. So they are a resident alien for tax purposes there. So moving on to exempt individuals, the benefits to exemption are they exclude days present in the substantial presence test, and you're much less likely to trigger that tax resident alien status. Exempt individuals must always complete Form 8843. I know Steve's going to answer a question. I've never done my Form 8843. Can I do it now? I would recommend, if you have not done it in the past and you were an exempt individual, that you still should do it. Right. So even though the due date is way past, potentially if it's for a previous year, you should still do it. Once again, you still are potentially liable for income tax. Exemption from this, you're exempt from the substantial presence test, not exempt from U.S. taxes. We really emphasize that in this presentation because it's a question that we get a lot. So trying to get that word out as much as we can. So if I sound like a broken record, it's because I'm sounding like a broken record. So moving on to the Form 8843, you must file this form if you're an exempt individual for substantial presence test purposes, even if you had no income, right? So even if you don't have to file Form 1040 NR, you still would file Form 8843. That's because it's an informational return to let the IRS know that you were an exempt individual. Now, if you do have a filing requirement, that 1040 NR, then the 8843 will be included as a form as part of that tax return, right? It'd be another page that gets sent off to the IRS, right? So it's done either way, but if you don't have a filing requirement, you can submit this form by itself. If you have a filing requirement, it gets submitted with the tax return. And then family members that are here with you in that 2 or F2 or J2 status must also file the form if they were present in the US, regardless of whether any US income was received. And this is one form per person, not one form per family. So if you're here with your spouse and both of you are exempt individuals, then you each would fill out Form 8843. So there's where you can get the form from. It's a 2-page PDF. If you're a student, you're going to fill out Part 1 and Part 3. If you're a scholar, you're going to fill out Part 1 and Part 2. So if you are a non-resident alien with taxable income, what do you need to file? That would be Form 1040 NR. You do not need to file federal return if you have no taxable income and you have no other reasons to file, such as you had wages or scholarships income exempt by a treaty, or you had a taxable scholarship or income tax was withheld. So these would be other reasons to file if you didn't have any income. So looking at pretty much an overview of how we get to whether or not a non-resident has a refund or tax due. So first we start with wages received in 2024. We then subtract the amount exempted by a tax treaty if there is any. We then add back any other taxable income in the US. This could be dividends, US capital gains, or this could be taxable scholarships. This is typically scholarships that are used for room and board. Scholarships that go towards qualified tuition and qualified educational expenses will never be taxed. We then subtract certain deductions. typically really the only one that we see is student loan interest. That gets us down to what's called adjusted gross income. We then subtract either the itemized deductions or the standard deduction. The standard deduction is only allowable for foreign students from India. So if a foreign student from India is the only person allowed to use, only non-resident allowed to use the standard deduction. Otherwise, anyone else is going to use that itemized deduction. And that itemized deduction, we typically see the state income tax you paid, that California SDI number that I talked about earlier that you can't get it back. That is an itemizable deduction for those that cannot take the standard deduction. That gets us down to taxable income. We then compare that taxable income to the tax tables and apply the appropriate tax rates based on which bracket that you may fall in based on your income. That gets us kind of a tax before credits and payments. We then subtract any tax credits for a non-resident. These are very, very rare. And then we subtract any tax payments, and the tax payments are really just that federal income tax withholding on your W-2 or your 1042-S. And that gets us to either you have a tax due because liability was greater than payments, or you have a refund because payments was greater than liability. So moving on to tax treaties that the U.S. has with other countries. There's different treatment for students and teachers and researchers and different types of income. A good bit of countries permit a certain amount of income to be treated as exempt from income tax. Each treaty is different. You should understand the treaty that applies to you. You can look the treaties up at the irs.gov website, and typically you focus on Articles 19, 20, or 21. So another a resource you can use is IRS Publication 901. This provides summaries of treaty provisions specific to scholars and students. So for the treaty to apply, a student or scholar must have been a resident of the treaty country prior to entering the U.S. for the provisions of that treaty to apply. The key factor here is residency and not citizenship of the individual. In a lot of these cases, specifically for foreign students, they're usually a citizen and a resident of the same treaty country, but it is important to determine that country of residency to apply the proper treaty benefits. The common treaty terms, so different income exclusions amount, they vary by student versus scholar and different length of time. Some treaty exemptions only apply for the first 2 years. Some apply, a few apply for 4. For foreign students, most of those Code 20s apply for 5 years. And then some, this is typically on the Code 16 scholarship and Code 19, which is the researcher income. Those are the ones we typically see the unlimited side. A few countries do have retro treaties, which say if the maximum years of presence are exceeded, then the entire treaty benefit is lost. One of those examples is German student. So after 4 years, you're still a non-resident for the 5th year, but you lose your treaty exemption for income code 20, which is wages. W-2 wages is the easiest way to explain code 20 income. So what that would mean is if a German student is here for more than 4 years, then they actually have to go back and amend those 4 previous tax returns where they claim the treaty exclusion amount. So India, UK, Netherlands, and Luxembourg scholars, they lose the entire treaty benefit after 2 years. There may be others too. We say Canada is weird. We want to say the treaty, not the country. But with that one, is a foreign student from Canada is exempt if they earn less than $10,000, but if they earn $10,001, the entire amount's taxable. There's kind of a very there's a number there where you'd want to, if I'm going to make more than 10,000 as a Canadian foreign student, I probably want to at least make 12,000. because then I'm actually working at a discount somewhere between 10 and 12. So I mentioned with the German students, this would for the German students as well as those scholars mentioned there. Canada wouldn't apply to Canada, but it would require for the German students or the scholars listed there a taxpayer to file amended returns and pay tax on the previous year's income that is no longer exempt by a treaty. So reporting treaty income, this is typically reported on 1042-S Box 1. International students and scholars should receive Form 1042-S in lieu of a Form W-2 for any income that is covered by a treaty, and sometimes income received that is not covered by a treaty, but is not W-2 income. We see that income code 29, deposit interest on a bank. If you come to the U.S., you open up a bank on campus, you open up an account with a bank on campus who offers a $100 bonus for opening an account. That's code 29 income. But typically the three we see the most are code 16, code 19, and code 20. Code 16 and code 20 we typically see for foreign students, and that's taxable, taxable scholarship or fellowship grants, or non-taxable, right? If you are listed, if your country is listed in income code 16 in publication 4011, then you probably have a treaty benefit for scholarship or fellowship grants. Code 20, that's compensation during study and training. That's typically a foreign student that's working on campus or was hired to do an internship as part of their degree study in the summertime. And then code 19 is where we see compensation for teaching or researching. That's going to be our J1 non-students would potentially have some code 19 income that may or may not be exempt based on treaty. So looking at IRS publication 4011, it's just a really important publication for foreign students and scholars. It's available at the irs.gov website. I strongly recommend that you download it, at least peruse through it. Will you understand everything in it? Probably not, but it does have some pretty good knowledge. And I would say the three income code tables are really important because that will really help you understand whether or not the U.S. has a tax treaty with your resident country for the different types of normal income that a foreign student or scholar may receive. So you see income code 16 right here is countries with treaty benefits for scholarship or fellowship grants. Once again, this is only going to be scholarship or fellowship grants that cover room, board, and other personal expenses. A scholarship or fellowship grant that covers tuition and fees will never be taxable. But you can see just a snippet there. That's not all the countries, but there's a plethora of countries. No true rhyme or reason, right? It's not specific to one area of the world. Just something. There's probably 20 to 30 countries listed with code 16 exemptions. Moving on to code 19. Once again, this is going to be those treaty benefits for teaching or researching. This is what's going to apply to most J1 non-students. So if you see your country listed here, that means the U.S. does have a treaty with your country, and all or a portion of your benefits for teaching will be exempt from tax for a period of time. And then lastly, code 20, this is benefits for studying and training. This is where we start getting into very variable dollar amounts. You saw on 16, basically no limit. You see a little bit limited there for the Commonwealth of Independent States. Code 19, a bunch of no limits. When we get to code 20, that's when we start seeing numbers, 2,000, 3,000, 5,000, 8,000, 9,000, 10,000. So this is where it can get kind of tricky on, when you start comparing that refund to a friend of yours that may be from a different country, right? This is where it's going to be kind of hard, because if you're here from Belgium and you have a friend that's here from China, well, the first $9,000 of your income is tax exempt, whereas only the first 5,000 of income from the People's Republic of China is exempt. And I emphasize the People's Republic of China because that is China proper. We do have the Republic of China, which is actually Taiwan, and Taiwan does not have an income tax treaty with the U.S. So just across that Taiwan Strait, a student from Taiwan would not have the treaty exemption of the $5,000 that a student from China would have. And for my Indian foreign students on the call, you will not see the standard deduction listed as an exemption for income code 20. For foreign students, you get to, foreign students from India, you get to use the standard deduction. That's not actually an exempt amount by treaty, but your treaty does authorize you to use the standard deduction. It's the best benefit, really, because the standard deduction in 2024 is $14,600. There's no code 20 treaty that gives really more than that $10,000 number. So it's the most beneficial one from solely a federal income tax perspective, but it's not considered an exempt amount. It's just the allowance of using the standard deduction. So what your documents probably look like or may look like, so the 1042-S generally reports treaty exempt income, but not always. It will sometimes include taxable scholarships. And you may receive a 1042-S from your bank with income code 29. That's that deposit interest. So looking at it, their box one, I kind of have highlighted in red. You'll see code 16, 19, or 20. Those are the common ones. You see the gross income amount is 1,000, whatever that might be. We'll also see, if you look just in box 3 there, chapter indicator. We typically see chapter 3, and then with that 3A and 3B will be filled out. If you see 04 at 3A, that probably means we have a treaty exemption with your country, and this amount's probably not taxable. So you usually see a 04 for exemption code, and then a 0 for the tax rate. What we see for some of those that do not have that same luxury with treaty exemption amounts, for scholarships specifically, you would see code 16 under income code. The exemption code here in 3A would be 00, meaning it's not exempt. And you would see a usually 14% tax rate is what we see. That's not the amount of tax you have to pay. That's the amount of tax that was withheld, right? So you may get some of that back, or you may owe a little more depending on a number of factors. If you do see that exemption code 0 and that tax rate 14, then in box 7A, that federal tax withheld, you'll probably see a number as well. If you have code 20 income that is not exempt, that's just going to be on the W-2. It's not going to flow through a 1042-S. Typically with code 20, we're only going to see a 1042-S if there's actually a treaty exempt amount that exists. So 1042-S from UCSD is prepared by UCSD, not by San Diego State. And you see the code 16, 19, and 20. Not everyone is going to get a 1042-S. So working on or off campus, that's that income code 20. Pretty much one of the more common ones that we see because foreign students do come to the U.S. and go to school, but then they also do get a part-time job while they're here, or an internship while they're here. So sometimes students and scholars try to make use of treaty benefits for dependent and independent personal service income. This is more working off campus in a non-internship type fashion. Many treaties do not permit students and scholars to earn these types of income. They're only allowed to engage in employment that's related to the reason they were admitted to the country as a student or scholar. For this, they'll be ineligible for any treaty exemption. They'll be taxed, and you'll pay the federal income tax amount, but you'll also likely be liable for Social Security and Medicare taxes as well. Whereas at W-2 income, you're typically not liable for any Social Security or Medicare tax. So looking at Form W-2 and comparing it with a 1042-S, so what we will typically see, let's say there's a $1,000 code 20 exemption in this example here, and the foreign student made $10,000. That was their gross income. We see 10,000 down here at the state. We see 9,000 up here in box 1. That's federal. And then we would want to see a 1042-S with $1,000 in it. That would actually say code 20, right? And that difference between 9 and 10 would be due to treaty, right? So let's say you had that $1,000 exemption, but you had more than one job. So you're only going to see that $1,000 difference on one of those W-2s, right? You get a $1,000 total exemption, not a $1,000 exemption per job. Box 2 is going to be the federal tax withheld. And then 3 through 6, that's that Social Security and Medicare wages and tax withheld. That should be blank for most of you. And then down to the state wages, while the U.S. may have a tax treaty with your resident country, that tax treaty likely doesn't flow down to the California level. Therefore, you may only have to report $9,000 in income for federal, but you would report $10,000 in income for the state of California. Some outside employers, if you're working at UCSD or San Diego State on campus, you're likely going to be okay because they deal with foreign students and foreign scholars on a more regular basis. But if you get an internship, depending on where that is, the payroll or HR department may just not understand that you don't have to pay Social Security and Medicare tax. So no 1042, you wouldn't get a 1042S. We can still apply the treaty when filing your tax return. So if you do have a treaty exempt amount, it's not lost if the administrative paperwork up front wasn't done correctly or wasn't done at all, right? We just have to kind of manually apply that treaty in the software, and it's not done more naturally as it would if you have a W-2 and a 1042S. They also might apply employment taxes, right? So you might have that Social Security and Medicare tax withheld. Once again, if you're an NRA or non-resident alien and you're permitted to work here on that F or J visa, you're likely going to be exempt from those employment taxes. The other thing that we've seen in the past, they may also issue you a Form 1099 miscellaneous or a Form 1099 NEC instead of a W-2. So what do we do if we're dealing with a 1099 miscellaneous or 1099 NEC? Well, if you're a resident, we report the miscellaneous as other income. If you're a resident and it's a 1099 NEC, we're typically going to report that as self-employment income, reported on Schedule C, and you also have to pay self-employment taxes, which are actually just the Social Security and Medicare taxes that one may have withheld from their W-2. If you're a non-resident alien, you're also a business, but you still remain exempt from those self-employment taxes. So you can report the miscellaneous form on other income. For the NEC, we can do either a Schedule C or report it as other income. Once again, as you're exempt from those self-employment taxes, that allows us that flexibility as a non-resident to report that 1099 NEC amounts as other income. So another form that you may receive is a 1099-G. First, this likely is not true if you're a student from India, and that's because you get to take the standard deduction. So for everyone else, your standard deduction is 0. So we're going to itemize your deductions, and one of the itemizable deductions is state income tax. So you may have had $200 in state income tax withheld, so you got a $200 deduction on your 2023 tax return as an example. When we filed your 2023 tax return, although they withheld $200, your liability was only $150. Therefore, you got a $50 refund. Therefore, you were able to deduct $200 from your federal income, but really you should have only deducted $150. To make up for that, or to fix that the following year without making you amend the previous year return, California will issue a 1099-G in the amount of $50. And if you're not a foreign student from India and you itemize your deductions, which you would, if you're not a foreign student from India, we would then report that $50 as income to help offset the deduction we had in the previous year. Once again, a little bit hard to really fully understand, but essentially think of you got a benefit in the previous year that we now are recognizing as income in a future year versus fixing the previous year return. So if your employer mistakenly withholds employment taxes, that is that Social Security and Medicare, there are 2 steps. First, ask for a refund from your employer. To me, this is the best way to do it because it may feel like it's not quicker because it may take a couple emails, a couple phone calls, a couple visits to the HR department. I promise you that time is well worth it. The other option is to file Form 843. That's not to be confused with 8843, but you're going to file Form 843. You fill this form out yourself. It's not part of your tax return. You cannot get Social Security and Medicare tax back in this example as part of your tax return. You do the refund from your employer, or you'll file that form 843, and then you'll mail it to the IRS. And there's nowhere to check, where's my refund? Hey, did they get it? Did they process it? Do they care about me? Right. So it's just kind of this black hole of maybe they got it and maybe one day I'll get a check in the mail, right? But we've seen this take 6 to 12 months or even longer for the IRS to process these. If you talk about the volume that the IRS is processing, these probably aren't the highest priority. They all go to the service center down in Austin, Texas. I'm sure they have one person that's about 75 years old that's been working on Form 843 for 50 years that processes 2 per day, right? So it's not, it may seem fast, like, oh, boom, I got the form filled out, I mailed it, that's great. That's much quicker than me emailing, calling, going into my HR department to try to explain to them why I should get it back. With that, you may not remember this, but if you might remember this from this presentation, but if you have that Social Security and Medicare tax withheld and you're not sure what you can do, email that VITA email at SDSU, and we have instructions also to give to you. We have a kind of a go-by for Form 843 if that's the route you want to take, helping you fill it out. But we will not prepare this for you. It's separate from your tax return filings. So other forms you may have received, the Form 1099 INT, we can disregard this for federal tax purposes, but we probably have to report it on the California side. It's kind of one of those adjustments that for the federal side, it's not going to be taxed, but potentially on the state side it is. Form 1098T, this foreign students are not eligible for educational credits. Therefore, we can disregard this. The 1098T may also have scholarships or grants amounts. We would also disregard that. We would actually just rely on whether or not the university issues you a 1042S with that income code 16. Others, Form 1099 div for dividends, Form 1099B for a broker statement listing security sales. And then sometimes that 1099 from like a brokerage, Robinhood, Merrill Lynch, Chase, Schwab, whoever that might be, they may issue you a consolidated Form 1099, and that would potentially include the Form 1099 div, the Form 1099 INT, and Form 1099B, all as one document. So if that's the case, not that big of a deal, right? That gets inputted into different areas of the software. What I will say for your stock sales, VITA is pretty limited in scope when it comes to stock sales. Especially if you have any type of cryptocurrency or wash sales, VITA is probably not going to be able to prepare those tax returns for you because they're just out of our scope to do, and you'll probably have to go to a paid tax professional. But if you only have a couple stocks and it was all basis reported to the IRS, there's no wash sales, kind of relatively straightforward, that's something that SDSU VITA can handle. So unique treaties. So we've hit this one already, but students on an FJ or M visa are allowed to use the standard deduction instead of itemizing deductions. That standard deduction for 2024 is $14,600, which effectively says that an Indian foreign student is not taxed on their first $14,600 of earnings, but they are taxed on any earnings in excess of that. A student from China is entitled to the $5,000 exemption each year for time reasonably necessary to complete education or training. A student from China could indeed become a resident alien for tax purposes after 5 years, but they would still be entitled to the treaty benefit if they remain students. Now looking at a scholar from China is exempt from tax on earned income for 3 years, although after 2 years they would become a resident alien. They do get 1 more year of tax benefits under the treaty. This is kind of in stark contrast to a foreign scholar from India, whereas they get 2 years of exempt income. However, if they stay for a 3rd year, they lose completely that exemption for the first 2 years. So, right, really difficult to compare. Got to know which country you are a resident of, for which treaty will apply to you, and then rules get really finicky, especially for some of these unique treaties. So when we look at reporting the amount of withholding you had or the amount of payments you had when we're trying to compare what your actual liability is versus what your payments or withholdings were. If we look at the two common forms, we'll see the withholdings are in our 1042S box 7A, and then the W-2 box 2 are the federal income tax withheld boxes we will typically refer to. So itemized deductions, we've talked a little bit about this already, but non-resident students and scholars, except students from India, are not permitted to take the standard deduction. Itemized deductions for foreign students and scholars are limited to state and local taxes, charitable contributions to U.S. charities only, and then student loan interest would actually be an adjustment to income, not necessarily an itemized deduction. But the big one that we see are the state income taxes that one has withheld from their check throughout the year. And then if you're working in California, the California SDI number would also be considered a form of local tax in this definition of itemized deductions. So the U.S. income tax provides a blanket deductions against taxable income. The standard deduction is generally $14,600 for a single taxpayer, and then double that, $29,200 for a married filing joint taxpayer. Once again, not applicable to non-residents except for that foreign student from India. All unmarried non-residents must use the single filing status, and married non-residents must use the married filing separately status, even if their spouse is present in the US. There are some special rules for students from Canada, Mexico, South Korea, and India, but the general rule is that they must file using that married non-resident alien or married filing separately status. If you are a non-resident alien who is married to a U.S. citizen or a resident alien, you can actually choose to be treated as a resident, and you would file a joint return on Form 1040. So typically cannot add any dependents to a non-resident tax return. Some exceptions are Canada and Mexico. Those dependents can be claimed if they meet all the tests for dependency. And then South Korea, dependents must live with a non-resident in the U.S. at least part of the year. And then lastly, dependents can be claimed from India if they meet all the tests for dependency. If this is you, you can go to IRS Publication 519 and read kind of the specific rules for dependents when it is with your resident country that you're from, if it's one of these four. So if you're married to a U.S. resident, typically child tax credits and earned income credits are not available to non-residents. But once again, if you're a non-resident married to a U.S. resident, you may be permitted to claim a child tax credit or an earned income credit under certain circumstances if you're filing jointly. So if you become a resident in 2024, but your spouse is not a resident, we said it a couple slides ago, you may file jointly both as residents. What you got to look at here is the income being worldwide income. So this might make sense if your trailing spouse, all right, the J2 or F2 spouse in a sense, has no other income at all, right? Because then you're getting kind of the resident special where you get to take advantage of the standard deduction. If you're married, that's $29,200. You get to go to the married filing jointly tax brackets, right? There's other benefits to that. So if your trailing non-resident spouse has no income and you're a resident in 2024, it probably makes sense to file jointly as residents. So the treaty exclusion doesn't necessarily match up with the exemption from substantial presence test. Anwar came to the U.S. on an F1 visa on August 1, 2019. That means he's exempt from counting days for 2019 through 2023, but not 2024. He will be a resident for tax purposes for the 2024 tax year. However, he still does at least get to benefit from the treaty, any treaty exemptions from January through July 31 of 2024. So here, Anwar could still have treaty excluded income in a year in which he became a resident, because the first 7 months in this example, he was still, his treaty provisions still were valid and applicable. So moving on to Glacier Tax Prep. So once again, if you're at UCSD, Glacier Tax Prep is an option for you. UCSD can give you kind of a code that you can use so that Glacier Tax Prep is free. If it cannot handle your tax situation because you have treaty provisions to apply to a resident return, that last slide, the timing with the treaty versus timing with substantial presence test, you wish to make the election to treat a non-resident spouse as a resident, or you have retro treaty issues, if you're a student, we certainly encourage booking an appointment with SDSU VITA. That's the SDSU VITA webpage. From there's another link to schedule an appointment. SDSU VITA typically handles foreign students just because that's what we see a lot of, but we also may be able to handle a J1 scholar return as well. I just asked if you are a J1 scholar, emailing that vitasdssu@gmail.com email, and you and I can kind of talk out your situation, and then we can determine if it's kind of within the scope of SDSU VITA to prepare your return. But if you're a scholar, depending on your situation, you may end up needing a paid preparer versus being able to use Glacier or being able to use SDSU VITA. So looking at paid preparers, the most trained are going to be certified public accountants or enrolled agents. That's what I am. I'm an enrolled agent. Least trained H&R Block, Liberty Tax. So probably shouldn't use these anyway as a non-resident because I'll probably not understand the fact that you're not a resident and you are a non-resident. But with that, at H&R Block and Liberty Tax and kind of these big block tax places that you see pop up and are like thriving in business from February 1st through April 30th, essentially. The employees you see inside are seasonal employees. So the shop itself may have one or two CPAs or enrolled agents that kind of overseeing the site. But the people that are actually preparing your tax return get like a 30 to 45 day training prior to, but they're not actually licensed. They're not the CPA. They're not the EA. They're preparing the tax returns. The oversight is being done by the CPA and EA. So kind of buyer beware there. You could get Jimmy that's been doing this seasonal job because Jimmy only wants to work 3 months out of the year, and Jimmy's been working at H&R Block for 20 years. Well, Jimmy's probably going to be okay. Your other option, you get Joey. Joey's down on his luck, and he just got fired a month ago, and he's like, you know what? I got to have something. H&R Block's hiring. I'll try it out. I've done my taxes before. You could get Joey, and it could be his first tax return he's ever done, right? So just kind of the experience at H&R Block and Liberty Tax vary. There certainly are situations where that's not a big deal. For you as a foreign student non-resident or a foreign scholar non-resident, your situations are unique. And these big block tax companies that set up sites, right, or even TurboTax online, they're not designed with you in mind. You'll need to find a preparer that specializes in non-residents and international issues. And unfortunately, because it's such a niche thing, I really don't have a list of preferred providers. We get asked that question a lot. We don't really have a list that we would prefer you to offer you so you can go see if you can get your tax return prepared. Here's some of the resources we talked about today. And with that, that ends my presentation. I'm going to now stop for a moment, pause, mute my mic, take a drink of water, and then answer any questions that you might have.
So I do want to express that today's workshop, before we start answering questions, is for federal tax returns. We are going to have a state-specific tax return workshop coming up that I hope everyone enrolls for so that you learn about your state filing obligations. And I'll go ahead and share a link in the chat for that workshop. Steve, I'll let you take it away.
Sorry, I am so busy typing.
I got it, Steve. I'll take it from here. I'm
Thank
back.
you.
I have my drink of water.
All
I'm
right.
good. So if you have a question, if you already asked it in the chat and Steve's already answered it, I promise you won't get a different answer from me. So please, I ask if you haven't had a chance to ask your question. And I think too, we typically at this time, Ms. Garcia, stop recording just in case there's any personal components that's asked. We don't want that on the recording.